Good afternoon, traders. This video is an update to my swing trade with the SPLG ETF, and the trade ended today. It ended green, but very small green, but I'll talk about why and what I intended to happen and all that kind of stuff. So I started this account with $500 at the beginning of February, and this account exists primarily solely for swing trading. I don't use it for day trading or any other type of investing or trading. So the idea was to put about half of the account into my first swing trade, and that way if the trade failed, I had half the funds available to get into another trade. It appears, though, that as soon as these trades end, that Chase gives you access to the full amount. So I may, and that may be because I have other accounts with Chase, and they know that I can cover it or something like that. But either way, that may change my entry for the next trade. I may just put everything into the next trade. So let's talk about the chart now on SPLG and see what happened with the trade. If you've watched my other videos, you know that I entered for the break of this daily candle. I got in at 44.29, and my stop loss was the 50 MA, and the idea was just to ride the trend as long as the price stayed above the stop loss. I'm sorry, yeah, as long as it stayed above the 50 MA, and it came down and touched it today, so that stopped me out. And the idea, you could say that, well, I should have traded 2R because this thing went to 2R, and which happened on this candle, and I could have got filled. But the idea behind the swing trading is to ride longer term trends. Like, for example, here, if I would have taken this entry, well, I just wasn't doing this back then, but if I would have taken this entry, which is kind of similar to the one that I took earlier, say this daily candle makes a new high, I get in here, and then if I would have done a 2R profit target on this trade, I would have gotten filled around here, $40.20 or so. But look what happened, and I would not have been able to get back in for another trade on this thing until here, many months later. This was the end of October, and this is the end of January. So I would have been in and out of that trade quickly for 2R, and then the money in my swing trade account would have just been sitting there because I'm only interested in swinging SPLG right now. So it would have been doing nothing, whereas if I would have just let it ride that 50 MA, then I could have been filled at 43.60, so another whole $1.40 per share of a move. So that that's the difference between the 2R trading on a swing trade and riding the 50 MA indicator. So I think I'm just going to stick with this strategy and wait for the next entry. Technically right now the next entry could be for the break of this candle because this candle dropped down below the 50 MA. So I'm going to put an order out. I'm going to wait until the market closes because I don't want it to get filled today just in case the price suddenly runs up over the top of this candle. I'm going to wait until, because what could happen, the reason that could be bad is, let's say I put my order in right now for, what's the high of this candle, 45.34. I could put my order in right now for 45.35, and if the price just happens to break that level to get me filled before the end of the day, and then tomorrow this thing flushes down further, that could be a pretty big loss that I don't have to take. So the idea is to wait for this day to end, put in the order for the break of this candle, and then if the stock flushes down tomorrow, I won't be filled, and then my next entry will be even lower. I'll get in cheaper and could ride the wave higher. So that's the reason why I don't want to put in the order until after the market closes. So anyway, hopefully this video helps you guys. Swing trading is still pretty new for me, but at least the first one was a successful trade. It was a very low risk to reward ratio, which that part I don't like, but I think that's just kind of part of riding this 50 MA strategy. Is sometimes the trades are going to work out where your risk to reward is pretty low. But if the trade did what I intended it to, which is ride a long-term trend like that, then the risk to reward is much, much higher. So anyway, hopefully this helps. Let me know what you think in the comment section below, and I'll see you definitely on Monday for a real day trading video, not a swing trading video. And maybe a few other things before then. So we'll see. Take care.